All right, so welcome to this very section. I would want us to, me first of all stop sharing. I want us to look at a very, very special question on materiality. Then we have what we call hot reviews, cold reviews. So in the next 20 minutes, we should be out of this virtual room. But most importantly, for the ninjas, our great students who are following us online, please, you need to subscribe to our channel. You need to subscribe to our channel. And even the guys who are following me on YouTube, if you're following me not on YouTube, but on Zoom, please look for Joshua Aura on YouTube and subscribe. Look for Joshua Aura on YouTube and subscribe. If you have not subscribed, you don't know what you're missing. You don't know what you're missing. You do not know what you are missing. That one I can assure you. All right. So here we are. We are told here to discuss why the identification of related parties and the material related party transactions can be difficult for auditors. 5 marks. You are an audit manager responsible for providing hot reviews on selected audit clients within your chartered certified accountant CCA or CPA firm. We are told here that you are currently reviewing the audit working papers for PAL Limited, a long-standing audit client for the year ended 31st January 20X8. The draft statement of financial position of Pulp Limited shows total assets of 12 million, and in 20X7 they were 11.5 million. Then it clicked a little bit. The audit senior has made the following comment in a summary of issues for your review. We are told the Pulp Limited statement of financial position shows a receivable classified as a current asset with a value of 25,000. The only audit evidence we have requested and obtained is a written representation from management stating that the amount is owed to Pulp Limited from Jarvis Limited. Jarvis Limited is controlled by Pulp's Limited chairman, known as who? Peter Sheffield. The balance is likely to be received 6 months after Pulp's year end, likely. The receivable was also outstanding at the last year end, when an identical written representation from management was provided, and our working papers noted that because the balance was immaterial, no further work was considered necessary. No disclosure has been made in the financial statements regarding the balance. Jarvis Limited is not audited by our firm, and we have verified that Pulp Limited does not own any shares in Jarvis Limited. So in relation to the receivable recognized on the statement of financial position of Pulp Limited as at the 1st January 08, comment on the matters you should consider. 5 marks. Recommend further audit procedures that should be carried out. 4 marks. Discuss the quality control issues raised by the audit senior's comments. So I would want us, ladies and gentlemen, in this case here to start with part A. But even before we start with part A, this part B is so interesting to me as an accountant. Is there somebody who knows why part B is so interesting? Part B is so interesting. I can see great things there. Number one, there is this guy, who happens to be the chairman of a company that owes our company. So automatically, this receivable will have to go under what we call related party transaction. So assuming in this case here we have Mr. for example, John. Mr. John in this case here happens to be, for example, a chairman of RCM. This great Mr. John also happens to be a director or even a chairman of a company known as XYZ. And this XYZ owes RCM College $25,000 US, quite a lot of money. You see, there is a very high possibility that Mr. John may not want XYZ, for example, even to pay us. All right? Because perhaps he has an interest in XYZ. So automatically, this is a related party transaction. Once in this case here, we have a director of RCM being a director of a company that automatically we are transacting with, which in this case here, we have a receivable, automatically RCM and XYZ are related parties. These are relatives. Is there somebody here who can give me examples of related parties? I know you know from IS-24. Related parties, please give me examples of these related parties or what we call relatives. Please go ahead and give me those relatives. I'll be very, very happy because you know them. You know them. I know you know them. Mm-hmm. Let me see your comments. Related parties. Yeah, entities controlled by directors, relatives, associates. Yeah, managers, director of a company. Or there is another AFM class that I'm hosting too. I don't know. I don't know. Okay. Okay. I know why. I know why. Ladies and gentlemen, I love your definitions here, but I would want you to put this down. I would want you to put this definition down. Very important definition, ladies and gentlemen. I would always want you to mention. Give us their definition. Then us that a related party is a person or an entity that has control, comma, joint control, or significant influence, over another entity, over another entity, or is connected to its key management personnel. Its key management what here? Personnel. Examples include, very important, examples of our relatives. We have number one, parent company. These are serious relative, parent company. Very serious relative. Parent company, serious relative. Yeah. So the moment you have in this case here, this is a B, this is A. If A is your parent, automatically that is a related party because A will be able to control your operations. Then number two, we have your subsidiary. Yeah. If A is a parent, then B is a subsidiary. Automatically, B as your subsidiary, ladies and gentlemen, will be a related party. Yeah, there is an element of control. Then we have in this case here what here? Associate. Associate because of what here? Because of course associate we have in this case here influence, significant influence. We have number 4, joint ventures. Joint ventures, so those are our related parties. We have a key management personnel, the directors, right? Number 6, close family members. Close family members. Lastly, in this particular case, companies controlled by directors. Will be our related parties. Companies controlled by directors will be our related parties. We even have like pension schemes. I'm just giving you examples so that you cannot remember. Our pension scheme automatically is our related party because we can control it. All right. So first of all, confirm that we are together up to here. So whenever we do business, first of all, I want confirmations that we are together up to here. I can see 1, 2, scroll up, okay. Yeah. So then remember in your exams, it could be in financial reporting, advanced financial reporting, it would be in audit and assurance, advanced audit and assurance. Your examiner would always ask you about disclosures. When you are doing your financial statements, what are you supposed to disclose? Yeah, what are you supposed to disclose? So, ladies and gentlemen, tell us there that disclosures under IAS 24, the following should be disclosed. The following should be disclosed. Number 1, nature of the relationship. Nature of relationship. How parties are related. How parties are related. Very, very important. Number 2, transactions. And the transactions you must give us nature and the amount of transactions. Nature and the amount of transactions, very important. Number 3, outstanding balances at the end of the year. You have tell us, in this case here, the outstanding balances. Yeah. Very, very important. Number 4, you must give us what we call the terms and the conditions. Terms and the conditions. If there are any guarantees given, you have to disclose these guarantees. Number 6, any bad debt provisions. Key management compensation. Very, very important. So I think with those ones, you are now okay. With those ones, you are very, very okay. At least you'll be able to remember a few of them. It pertains your what? Your exams. Your exams. Now, ladies and gentlemen, as I continue with this, I would want you to know that the related parties, that is where corruption happens within these organizations. Remember the case of CMC Motors used to be a huge company. But right now, they are on their knees. Why? Because of related parties. The directors up there, the case is in the court. The directors are up there, ladies and gentlemen, stole from the company. How did they steal from the company? They went to South Sudan, Republic of South Sudan, registered subsidiaries. Whenever they were bringing, in this case here, vehicles to be leased locally here by Kenya Police, EPC government of Kenya, they would, or even to be bought, they were importing those vehicles by the subsidiaries in South Sudan. And then all the subsidiaries in South Sudan were selling it to Kenya here at a very high price, So maybe they bring those vehicles to Southern Sudan subsidiaries for Kenya shillings 5 million. But they inflate that price and sell those vehicles to the Kenyan parent company, maybe for 8 million. And then, of course, you and I know that the 3 million profit being made by Southern Sudan, of course, is being shared amongst what here? Directors. So a company which used to be very big reached a point where they could not, in this case here, pay even simple things like salaries. Because of what here? Related parties. Normally, it is the relatives who mess up companies. If you look at the reason as to why very many companies die within their 5 years of operations, it's because of relatives. It is because of relatives. It is because, for example, if Aura is an owner of RCM, I would want to put myself on a payroll where I'm earning $1 million. And I know for sure my service that I'm providing to this company is not worth $1 million, it's not even worth 200,000. It's because in this case here, when, for example, and this is just an example, my wife, now, for example, having seen that RCM is doing very, very well, she may come and start, in this case, making a few demands on the management. All right. Automatically, close family members, my daughter, if she does any business with RCM, that has to be disclosed. So whenever we talk of IS 24, is really a key standard that every person who is doing audit or financial reporting, both the normal, intermediate audit and advanced audit, they should always be able to do what here? They should always be able to remember. But now look at part 1 of this question. Look at part 1 of this question. So part 1 of this question, they want us to discuss, my friends, part 1 here. They want us to discuss why identification of related parties and material related party transactions can be very difficult for auditors, like if it's out and for coming to audit your organization. Why will it be very hard, ladies and gentlemen, for us to identify or even work with these related parties? It's because I've told you there will be a lot of concealment. A lot of concealment. People would want to conceal because we know for sure that a lot of theft happens within what year? Related parties. Look at a company like Mumia Sugar. Mumia Sugar, ladies and gentlemen, is supposed to be a giant, especially on the Western bloc, in terms of economy. Yeah, but because now we have a very, very, fraudulent, parent. You know, Mumia Sugar is owned by, of course, they've made a few transfers, but has been owned by what year? By government. Some of these government officials, very, very fraudulent. All right. So in this case here, they get there and they steal almost everything. All right. So related parties normally are the ones that mess what here? They mess these organizations. And when they mess these organizations, then they would want to do a lot of concealment. So as an auditor, there are chances you may not be able to really see anything there. So part 1 is asking us, ladies and gentlemen, to discuss why, identification of related parties and material related party transactions can be difficult for auditors. I have a question for you, or rather an answer for you here because of time. Difficult, complex definition. Related party relationships can be complex and subjective. making them difficult to identify. So you can see in this case here, my madam has come and done business with RCM and very comfortably say that this lady is not even my wife. What do you have to prove? Hata wacha na madam, assuming for example I was a bad man, and niko na mpango ya kando. So mpango ya kando unajua nafaa kuwa disclosed pia kama nini, kama related party, but no one will accept it. All right. So there will always be that subjectivity, and I mean, at the end of the day, sorry, there's somebody in this case here who has opened their microphones. A minute, I sort this out. 1 minute. So that doesn't happen, I come to host tools, participants. So they should not be able to unblock their microphones. They shall remain blocked forever because these are related parties. Related parties can mess us, isn't it? Let's mute them. Thank you. So in this case here, there is that complexity, subjectivity in terms of identifying them. Now remember, who will be mandated with this noble task of telling you who the related parties are? It is management. So you see, reliance on management, when you rely on management and these are guys who have stolen, they'll not be able to tell you everything that has happened and related parties. Auditors often depend on management to disclose related parties, especially where little documentary evidence does what here exists. Accounting systems have not been designed to bring out, to capture these related parties here. Accounting systems may not be designed to separately identify and record related party transactions. Deliberate concealment. Management may deliberately hide related party transactions to commit fraud or improve appearance of the financial statements. Materiality. Related party transactions may be material by nature, even when the amounts involved are what here small. So many people will always hide on materiality. Whenever they want to hide off these related parties, they will tell you that that transaction is immaterial. But now remember, IAS 24 tells us that, for example, if you do business with a director, even if the amounts involved are immaterial, they're very small, you shall always, in this case, have to do a disclosure, even if it's 1 shilling. The director owes this company, always, anything by nature, which is related party by nature, is always what your material. All right. But now we are saying in this case here, that concept of materiality, they could easily use it. In this case here, to conceal a lot of what here information, like what is happening in part B of this question, ladies and gentlemen. I believe there you have a few areas here and there. So you're told here, you are an auditor manager. Audit manager, I mean, you are an audit manager. I'm almost finishing here. You are an audit manager. Yeah, you are an audit manager. You are an audit manager responsible for providing hot reviews on selected audit clients within your firm of CCA. Can a good student in this case here, first of all, give me a difference between hot reviews and cold reviews? Remember hot reviews? Let me be telling you a story as I wait for you guys to give me an answer. You see, for example, at Aura and Co, I run an audit firm. Once in this case here, these auditors, the engagement partner has finished auditing XYZ company. Before we release the final opinion, we should be able to have another highly experienced auditor within the firm looking at the opinion and the evidence collected. So when this auditor looks at the opinion and the evidence collected, there is a likelihood that he may change the audit opinion. He may say, I mean, I've looked at this evidence, and in this case here, from what I'm seeing, the audit opinion should be this one. You see, now, this is happening before release of the auditor's opinion to the public. So everything there is hot. Why? Because the opinion may change. I remember when I started working as a young auditor, we could, in this case here, bring in our auditor opinions. Yeah, we say this is what we, and then we give this to the partner. Yeah, audit partner. And of course, most likely, especially during those old days, those guys would simply come and change their opinion even without informing you. So they were reviewing at that high level. Of course, I know some of them were getting some kickbacks, right? But now we're looking at it professionally. If this person at the top end there believes that maybe you made a mistake before release of this audit opinion, he can easily, in this case here, make a change. It's called a hot review. How about a cold review? Cold review normally happens after the audit opinion has been released. So we have publicly known the opinion, but now you call senior people also within the organization or even outside there for peer reviews. They come and look at whether whatever opinion you gave is correct and what lessons are we able to learn out of this audit that we have just finished and exposed the opinion out there. You see, in that case here, there is no possibility of the opinion ever changing. Yeah, this is an ice. Yeah, there is nothing like an ice breaking there. All right. So in this case here, it's a cold review because you're only doing the review for purposes of learning lessons to ensure that in future, we shall be able to do things correctly or even differently. Or even for purpose of what like a Raul and core, we normally use this for purposes of training our staff. All right. So I don't know from that explanation, are you guys able to differentiate between a hot review and a cold review from that explanation? Are you in a position of now differentiating? No, most of them are not now even talking to me at all. They're not talking to me. They're not talking to me. I would really want you to be very, very good in terms of this, because what I know, all of you, if you want to make serious monies, you have to think about what year joining audit industry. That is where we have money. That is where we have money. You must be able to join audit industry. So the most important thing you're supposed to know, ladies and gentlemen, under hot, audit is still alive. The report has not yet been signed and published. Cold, audit is already finished. The report has already been signed. All right. So it will be very, very important as I sign and go to do this question here, that under hot review, audit is still in progress. If somebody has finished, but still we can make a review internally and change the opinion. All right. So hot review is basically conducted before the auditor's report is signed or published. Cold review is after the auditor's report is signed. Thank you very much. So I was just trying to address myself and yourselves regarding this concept of what year, hot and cold reviews, that we are okay. So we are currently reviewing the audit working papers for Pulp Limited along our standing audit client for the year ended at 1st January 08. The draft statement of financial position of Pulp Limited shows 12 million. Yeah, 07 it was 11.5. The audit senior has made the following comment in summary of issues of review. Pulp Limited statement of financial position shows that receivable classified as a current asset whose value is 25,000, I mean. So if I'm the one doing this, I will come and see whether this amount is material. So I will do a materiality. So materiality in form of assets, we can only say that an item is material if it falls within this 2%, 1% to 2%. Materiality, remember how materiality is set. We can set materiality on the basis of PBT, basis of PAT, profit after tax, or basis of assets. So if it's assets, we are looking at materiality of this amount. All right. So what I will do, I will come and take the lower threshold, what we call lower materiality. Lower amount, this 1% of the total assets. Total assets given currently 12 million. Can somebody give me this number? What is the lower materiality? 1% of 12 million. What is the lower materiality of this 12 million? Is it 12,000 or something, or 120? I don't know. What do we have there? 1%. 1%. Please use your calculator. Mobari Winnie, my friend. Use your calculator. 1% of 12 million. Please use your calculator. 120,000. Thank you. Thank you. 120,000. Thank you. 120,000. So my lower is 120,000. All right. And then we have the upper. You don't have to calculate the upper, but just to show understanding that you know what is happening. We talk of 2% of the total assets, which are worth 12 million today. So of course I know now this will be 240,000. All right. So, ladies and gentlemen, we appreciate the fact that an item, an asset item, can only be considered to be material if it falls within this range, 120,000 to 40,000. If it falls in this case here below, if it falls below here, if it falls below 120,000, it is immaterial. It is immaterial. If it falls below here, it is immaterial. If it falls above here, that is dangerously material. You need to do a lot of audit tests. So below 120, immaterial. All right. Now look at, for example, our asset called receivable from PAL. We are saying from PAL, ladies and gentlemen, they have given us a figure here. So PAL Limited Statement of Financial Position shows a receivable, which is an asset, which has been classified as a current asset with 25,000. So when you compare 25,000, this receivable, vis-a-vis this class, vis-a-vis this class. Ladies and gentlemen, when you compare that 25,000 vis-a-vis this class, is this 25,000 really material or immaterial? Please talk to me. Is it material or immaterial? It is too tiny. It is immaterial, isn't it? It is immaterial. So as an auditor, I should not even bother, taking it out. It is immaterial. I should not bother checking it out at all because it is immaterial. But now there is one thing that is really very, very key to me, which will make me start considering it. The concept of what here? Related party. Now, please listen. We are told here that the only audit evidence we have, the only audit evidence that we have, which audit evidence do we have here? So you're told here the only audit evidence we have requested and obtained is a written representation from the management stating that the amount is owed to PALP Limited from Jarvis Limited. Very good. Management representation. And then number two, we are told Jarvis Limited is controlled by PALP's Limited chairman, Peter Sheffield. So our chairman is controlling who? This company which is owing us. So remember when we were explaining, ladies and gentlemen, this concept of related parties, we said if the companies are, look at this, companies controlled by directors. If you've got a company, in this case, you can see Sheffield is in our company and is our chairman, and it's controlling the other company which owes us. So automatically, we are looking at an issue of what year? We are looking at an issue of related what year? Related party. We are looking at an issue of related party. The balance is likely to be received 6 months after PALP Limited's year end. I would want to explain something. This amount, of course, is immaterial. That is quantitatively. But qualitatively, given the nature of the relationship, given that this is what we call a related party transaction, even if the balance is just one book, automatically, ladies and gentlemen, that amount will be classified as a related party. We are told something here that the receivable was also outstanding at the last year. You can see this receivable has been with them for quite a long time. So last year, the whole of last year, it was outstanding when an identical written representation from management was provided. And our working papers noted that because the balance was immaterial, no further work was considered necessary. No disclosure has been made in the financial statements regarding the balance because according to them, it is immaterial. Jarvis Limited is not audited by our firm, and we have verified that PALP Limited does not own any shares in Jarvis. Now, ladies and gentlemen, there are two great things that I would want you to know. This amount, of course, we are in agreement that given the nature of the amount owed, it is owed to us by a relative. All right. It's a related party transaction, regardless of quantitative threshold. Given the nature that this is owed to us by our relative, then the amount is material. The amount is material. And then the other thing, there will be a problem with classification. This amount was owed to us the whole of last year. Again, there is 6 months in the current. You see, we only classify things to be current if the owing is less than a year. So this should be a non-current receivable. We don't expect to get it even in the current year. It should be non-current because it has been outstanding for more than 1 year. And these guys are not even showing any signs that this amount will be paid in this year. So we have got two problems, related party issue, and then we have a classification issue. Now, please listen. What do they want us to do here? In the interest of time, I only have 5A. This time runs very fast. This time runs very fast. Why does it run that fast? So in relation to the receivable recognized on the statement of financial position of pulpers at this date, comment on the matter you should consider 5 marks. So please allow me to just read the answer here. The matters I should consider. Number 1, related party relationship. Jarvis Limited is controlled by Pulps Limited chairman, therefore it is likely to be related party under IS 24. Materiality, 25,000 represents only 0.21%. Yeah, which is less than 1% of the total assets. It is therefore not material by amount, but material by nature because it involves a related party. In this material item, in terms of a related party, has not been disclosed properly. So disclosure, IS 24 requires appropriate disclosure of related party relationship, transactions, and outstanding balances. No disclosure has been made. Of course, we know you will not recover this amount. The balance has remained unpaid for more than 1 year. Its recoverability is therefore doubtful and should be investigated. Classification, the balance may have been correctly classified as a current receivable. It may require classification as a non-current receivable or investment. Further transactions, the auditor should consider whether other undisclosed transactions exist between Pulp and Jarvis Limited. Audit opinion, if management refuses to make required disclosure, the auditor should consider a modified opinion due to a material misstatement. Due to a material misstatement. Ladies and gentlemen, I believe that is really great. Have you been able to follow? You don't have to follow like 100%. You just need like what we call general, high-level understanding. And then you'll be able to now put it in your own way. Have you been able to follow, guys? So now you can give me just 1 minute to go through the last part. So the last part here, they want us in this case to discuss or recommend further audit procedures here that should be carried out. Remember, audit procedures, ladies and gentlemen, we normally talk about AAA-CPA. So we have analytical procedures. We have in this case here, and there will be a lot of inquiries to be done, internally, externally. All right. All right. We must inspect very, very many documents. We have observation, especially when we are testing internal control. Then there shall be a lot of recalculations, even to determine whether we need a provision for doubtful debts here. So whenever we talk about, ladies and gentlemen, whenever we talk about rather audit procedures, always reason like this. Reason like that, and you'll be able to get most of that. Yeah. Audit procedure, first of all, let the management and the chairman give us a statement, just like the DCR. We need these guys to give us a statement. So we need what we call management representations. So obtain further written representations from Peter Sheffield. Confirm his control over Jarvis Limited, the recoverability of the balance, and whether other transactions exist. Inspect agreements and supporting documents. Inspection I. Establish the nature, terms, repayment, date, interest, security relating to these 25,000 balance. Discuss. Remember we said we have RA. A is inquiries and third-party confirmations. Discuss the transaction with management. Determine whether the balance represents a trade receivable, a loan, or an investment. Inspect. I want you to be talking about inspection. There are so many things to inspect. Inspect board minutes. Identify discussions and approvals relating to Jarvis Limited and the recoverability of the balance. Review Jarvis Limited's financial statements. This company, is it still really a going concern? Confirm the related party relationship, corresponding liability, and Jarvis Limited's ability to pay the amount. Yeah. So Jarvis Limited, in this case, ladies and gentlemen, we have to look if it's especially a public company, the financial statements are available. Check subsequent receipts, inspect bank statements and cash records after year end for evidence that this has been prepaid. Then they ask us a question on quality control issues. Quality control issues, what I need to do, ladies and gentlemen, is to share this handout with you and then ask you to go and look at this. So that now marks the end of our session. It's my prayers and hope that you guys have been able to understand something, however small. It is my hope that you guys have been able to understand something, however small. Have you enjoyed the session? Have we enjoyed the session? You have shared, yeah. Great. Great, thank you so much. Yeah. And you see, AAA and AA, they simply want to get you to get that high understanding, business acumen. You can never fail. You can never fail. Thank you so much. See you next the day after tomorrow. We need to come up with a timetable for these revision classes. For now, bye-bye. Bye.